All right, let's get right into it. We are going to dissect one of the most explosive things you can see in the stock market, a massive technical breakout. And honestly, we couldn't have a better example than what just happened with BURU, Nuburu Inc. This was a move that got everyone talking. And it all starts with this one absolutely staggering number, 1.1 billion. That's how many shares of this one stock were traded in a single day. To really get a sense of that, it's an unbelievable amount of activity. It tells you something huge is going on. And this chart just says it all, doesn't it? That little bar on the left, that's what a normal day looks like for this stock. And that skyscraper on the right, that's the day we're talking about. This isn't just a little bit of extra interest. This is a seismic shift, a signal that a massive crowd has suddenly shown up to the party. Now, all that volume, it lit a fire under the price. The stock rocketed from about a quarter to nearly 50 cents. It basically doubled in value in a matter of hours. So you've got this insane volume and a crazy price spike. What on earth does it all mean? Okay, so let's look at this from one side first. We're going to make the bull case, the argument that all this chaos is actually just rocket fuel getting ready for an even bigger launch. And that's the question, right? When you see a move like this, it's impossible not to wonder, is this it? Is this the big one? That fear of missing out, what traders call FOMO, it becomes almost overwhelming in moments like these. And there's a real technical reason behind that FOMO. It's called breakout confirmation. See, a price jump on its own could just be random noise. But when you get a huge price jump backed by a tidal wave of volume, well, that's the market screaming that this move is the real deal. It shows massive conviction. And when you look under the hood, the momentum gauges are just flashing green across the board. The MACD, it shows that the recent surge is just blowing its historical average out of the water. The BURU indicator, which basically measures the strength of an uptrend, is at a perfect 100. It literally can't go any higher. And the ADX is saying, yep, we've got a powerful new trend here. From a momentum point of view, it is all systems go. And this right here really shows you the raw power we're talking about. The current price has moved so fast, it's left all of its old price averages, the 5-day, the 20-day, even the 200-day, way back in the dust. That huge gap, it's a textbook sign of incredible short-term strength. But could that strength also be a major warning sign? So now we have to flip the script, because for every rocket ship, there's a risk of it running out of fuel. Let's look at the bear case, where all these exciting signals actually start to look like flashing red warning lights.
This is the other side of the coin, the question that keeps traders up at night. What if this incredible burst of energy just isn't sustainable? What if it's gone too far, way too fast, and it's about to collapse under its own weight?
And that brings us to a really important concept for the bears, overbought. The best way to think about it is like a rubber band. You can stretch it, but if you pull it too far, it is going to snap back, and hard. That's the danger here. The price has been stretched to a serious extreme. So here's the core conflict, the real tug of war. On one side, you have all those momentum indicators we talked about, and they are screaming buy, buy, buy. But on the other side, you have a totally different set of tools called oscillators, and they're designed to measure that rubber band effect. And right now, they are sounding a major alarm. And I'm not kidding. These readings are at a level you almost never see. The RSI, which measures how fast the price has moved, is at 88. Now, anything over 70 is considered overbought, so 88 is way up there. The money flow index is right there with it, and the Stochh RSI, which is a super sensitive indicator, it's at a perfect 100. These aren't just little warnings, these are screaming signs that the rubber band is stretched to its absolute limit.
So, what happens when an unstoppable force like this bullish momentum meets an immovable object like these extreme overbought warnings? Well, you get a standoff. And from here, there are really 3 different ways this could play out.
And the most important thing to get right now is that in a situation like this, all bets are off. Predictability just goes right out the window. When you have 2 powerful forces clashing like this, the only thing you can really count on is some wild volatility. The battle between the bulls and the bears is about to get very, very real. So let's break down the 3 most likely paths. Scenario 1, the rally just keeps going. That FOMO we talked about completely takes over, fresh money piles in, and the stock smashes through to new highs. Scenario 2, the sharp reversal.
That rubber band finally snaps back, traders rush to take profits, and the price plummets back down toward where this whole thing started. And then there's scenario 3, the volatile cool down. The stock just thrashes around sideways for a while in a wide, choppy range as the market tries to figure out what to do next.
Okay, so after all of that, what's the big takeaway? How in the world do you make sense of a situation this chaotic?
Well, here's the most important lesson. This kind of analysis is never about predicting the future with some kind of crystal ball. It's about something much more practical. It's about identifying the battlefield. It's about knowing the exact lines in the sand where the fight will be won or lost.
And here are those key levels. You've got the resistance, the ceiling, right at the high of that crazy day, just under 50 cents. If the price breaks above that, the bulls are in charge. Then you have the support zone, the floor, down around 29 cents. If it breaks below that, the bears have won. And that last bit, the probable range, that just gives you a sense of the wild swings you can probably expect.
You know, in the end, the source material really sums it all up with one simple, powerful line. The potential for a huge reward is there, for sure, but the risk of a sudden, painful drop is just as real. Which really just leaves us with one final question to think about. When you're faced with a classic showdown between pure, unadulterated hype and extreme, undeniable risk, how do you decide which one to listen to? It's a question anyone looking at a stock like this has to answer for themselves.